Thank you very much, Dave, and thanks for your insight into the credit issues that confront us and clearly is in the center of the current situation of this marketplace. Also, thank all of you for joining us here today, and if you're known by the company you keep, we're in great shape with the quality of the professionals that are in this room with us this afternoon. Next, we'll discuss the Boston office market, which is the hub of New England and the barometer for how our local markets are doing. The towers, the financial institutions, the professional service firms, the new developments really set the pricing parameters and the rent levels and sale prices for our region. One thing is for sure, as we begin 2009, the market has clearly changed a bit. As we looked at the market a year ago, it was clearly favoring landlords, as we had single-digit vacancy and positive net absorption. As we begin 2009, the market is shifting, as we now have double-digit vacancy at 10%, and we have negative net absorption, which we experienced at the end of last year, which was the first time after 5 years of positive net absorption. So clearly, it's a different market as we begin this new year. The agenda for the next several minutes will be the following. We'll give you the headlines that we've been seeing in our local market in Boston, the statistics, the top 25, which are the top users of space in terms of leased office space in our region, many household names that we're tracking closely to see whether they are leasing space or subleasing space in the new year. We'll look closely at demand, which is really the driver in terms of the recovery in this marketplace. It's not a supply problem with new space coming in. It's how much space will be put on the market by existing companies, and the forecast as we look ahead to the next couple of years. Well, the message is really very clear, and it isn't positive. If you look at the adjectives on this page, a bleak economy, sales prices referred to as plunging, a grim real estate market, and the U.S. in a recession. We think that the core of this issue is all about jobs, and we've all read recently about layoffs, and we're tracking that very closely to see what that translates into in terms of space put on the market. And consumer confidence also, which is at or near an all-time low, hoping that that will pick up over the next number of months. As we looked at last year, we thought the keys to 2008 were those following 5 points. Velocity, how much business was being transacted? Well, almost 5 million square feet was transacted. 250 transactions averaging 20,000 square feet per transaction. A lot of deals did happen. The sublease market was more space put on the market. It held steady through 3 quarters, but then in the 4th quarter, the sublease market went from 750,000 square feet to 1 million square feet. So that was a negative. Wellington, one of Boston's strongest financial institutions, stepping up and leasing, pre-leasing 450,000 square feet at Boston Properties' new development at Russia Wharf, which is currently under construction and slated for delivery in the 1st quarter of 2011. That's a positive. The sale of 1 Federal Street, which Tishman Speyer put on the market, didn't happen, but 1 Beacon Street with Beacon Capital did sell a 50% interest late in the year to Allianz, one of Europe's largest insurance companies. And new construction was both positive and negative. Russia Wharf, 2 Financial Center, and Fan Pier recently topped off in the Seaport, whereas 1 Franklin Street, South Station, still looking from a financing point of view to see if they can get things going, which is very, very difficult during this time period. 888 Boylston in the Back Bay with Boston Properties recently received approvals to go forward with a 17-story, 400,000 square foot tower, but it appears they will proceed if they have a tenant in hand. In terms of 2009, looking at those same keys, we think velocity or leasing activity will be down, approximately 3.5 million square feet. That's down 30%, but transactions will happen. The sublease market, we think, will go up between 1.5 and 2 million square feet from the current level of 1 million. The pre-leasing of Fan Pier and the status of the Hancock Tower open for interpretation right now in terms of how they will fare as we proceed through the year. Certainly on the Hancock Tower, the sooner a resolution is reached, the better. In new construction, we think will be very difficult, as Dave had just talked about the current financing climate. In a snapshot, this gives you a look at the Boston office market. It's 57 million square feet. The vacancy rate is currently 10.5%. and rents are down about 10% from where they were a year ago when we delivered this presentation, between $30 and $65 per square foot from the Class B to the Class A office market. I think the big number to focus on was that we had negative 500,000 square feet of absorption in 2008 after 5 consecutive years of positive net absorption. And we would expect with the rents you see on the screen that there'll be a further decline in those rents by approximately 10% this year as tenants and landlords try to determine the right strike point for rents at this point. We study the tower market very closely, which is about 50% of the overall market, 40 buildings, 28 million square feet. The vacancy rate above the 20th floor in towers is still quite tight at 4% and 7% below the 20th floor. And rents, on average, have declined by about 10% in the towers. So we'll see how that plays out as we proceed through the year, but we still think there are good opportunities in the towers for tenants, but prices seem to be declining. This next slide might be the most important of the presentation as we look at the period between 2000 and 2010. We had 5 consecutive years of positive absorption from 2003 to 2007, and the vacancy declined by about 50% during that period. We think the vacancy will increase over the next 2 to 3 years. A glass of water. Thank you. I get pretty keyed up when I look at vacancy rates. I was rolling and I said I'd go for a little water right now. And we think 2% increases over the next 3 years is what we're going to see because of the negative absorption that we're experiencing in the market right now, 2008 going into 2009 and 10. And the main driver for that is the sublease space, which is at 1 million square feet right now, and we think it will hover between 1.5 and 1.75 million square feet over the next 2 years. The main driver there, again, is jobs and the impact on sublease space in the market. Now, I mentioned at the beginning that we take a look at the top 25. We're studying very closely these companies, many of whom are household names: Bank of America, State Street Bank, and Fidelity. As we closed out 2008, only one of those firms had sublease space on the market, and it was Houghton Mifflin, and they still have that 150,000 square feet on the market out of the 1 million. However, as we look at this year, a number of these firms have recently announced some form of layoffs, whether it's State Street or Fidelity, which gets everyone's attention, Wellington, MFS, Edwards Angel, to name a few, and we're tracking this very closely to see what this translates to in terms of sublease space this year. A number of these firms did transact this year in lease space, like Ropes & Gray and State Street and Wellington, which leased 450,000 square feet. So the message is basically solid, but we're studying this very closely. And in terms of tenants in the market, still solid, but down about 15% from where we typically are at 3 million square feet at 2.5 million. And we've got 7 of the 10 firms up here are law firms. So we're watching very closely to see how much space these firms actually end up leasing and when they transact. They all have leases expiring over the next few years. Quite a bit of planning and studying going on. So in closing, the forecast looks something like this. We see rents declining this year by approximately 10%, sublease space increasing somewhere between 500,000 to 1 million square feet from the current level of 1 million square feet. Velocity down somewhat, about 30% we predict, from 5 million to 3.5 million. Renewal activity will be up because of the cost to move and the construction and the financing associated with that. We think 75-25 will be the ratio of firms staying versus relocating. And last but not least, sales volume we think will be down this year. Lisa will touch more on that during her remarks. So that gives you a snapshot of the Boston office market, the trends that we see right now. We're watching it very closely, but on balance, it's solid, but the fundamentals do seem to be going more towards increased vacancy and more towards the tenants market. So at this point, I'd like to introduce Joe Flaherty. I think a couple of years ago, Joe, I forgot to introduce you. So this year, we're all over it. Welcome aboard, and Joe is going to talk about the Cambridge office market.